We talk about, China being a pain for investors, and we heard from Raimondo saying that it is now uninvestable. At least that's what American companies are saying. How are you assessing the risk? What are your clients saying about whether or not they want to be in China?
So first, thanks for having me, Haslinda. And Rish, sorry again, because I was in Hong Kong before, and then as it happens, I'm here with you.
You will be, Mark.
In Singapore. Okay. We can't hear you, Rish. Sorry. No, so joking aside, I think like clients are, you look at global clients around the world, like this year, they're starting the year being quite, feeling pretty good because their performance is okay and they haven't had outflows, but also very cautious. And they look at the US equity market, they look at China, they look at Europe, they look at emerging market, and in every single case, and I'm sure we'll talk about it, they have reasons to be cautious. So we'll see how it plays out. I love the analysis from Jill. I completely agree. I think they're probably trying a few measures and see what happens.
It's not working though, right? I mean, as an investor, what are you waiting to see?
So I tell you what our investors want. And this is the case in every time there is a bit of a challenging situation. And you could argue that real estate in China is a challenging situation. They often expect the bazooka type answer, and they will push the market to get there. Now, in some cases, it will happen. In other cases, the series of measures, like we've seen here, end up working, and that restores restore the confidence of the market participants.
Fact of the matter is, China is the second largest economy. You, in a way, can not invest in China, right? I mean, we're talking about how the economy is slowing.
I thought you were going to say you cannot ignore China,
you cannot ignore China. You cannot ignore China. I mean, this is an economy, they say, that is slowing down, but it's still 4.5%. If you take a look at the possible opportunities, what are they? I mean, some call out Baba, for instance, is trading at 50% discount to its peers, and that's good value.
So I'm clearly not going to comment on single securities because I cannot, but more importantly, I'm not sure I'm a great investor myself, so I leave it to people who know what they do. I tell you how to look at it. Today, the world is divided in two. You have, on one hand, Europe and China slowing down to a certain extent, and then the economy being a bit challenged for different reasons. And you have emerging markets and the US, in particular the US, where the economy is much more resilient than we thought. Having said that, it's not as simple as saying, okay, I'm going to put all my money in the US. Because if you look at the US stock market, and our equity analyst, our co-head of research, Marco, would tell you about it, we feel the valuations are pretty high. And so do other clients too. Emerging markets is probably a good case to invest. There is a good growth story. They hike quicker than others. They have a lot of room to cut rates and probably bring some opportunities back. And then you have Europe, where the consumer has stopped spending. And how do you restart the machine? And then China is a bit in the middle. They have to deal with their real estate challenges, and they have to get the consumer to start spending again.
Mark, so, I mean, are there more compelling places, though, perhaps arguably, to be investing in this part of the world? And, what do you make of that?
So I'm always very impressed and surprised, even though I live in New York, as you can tell by my accent, that the energy and the vibrance of cities. So being in Hong Kong, being in Singapore, it's always amazing. I only get that feeling when I go. I went to Dubai not so long ago, which you get exactly that. So you're absolutely right. If you look at Asia, ex-China, this is today an area that is not only growing, that is attracting a lot of investors from around the world. And I don't see that stopping in the short term.